So, because today was an important day again. Yesterday already was a lot of news, and I spoke about it since last week. Today, the FOMC news out of the US coming. It's like basically, it's like the Federal Reserve. I always can't get it right. What it is, but basically the FOMC, it is the central banks, the Fed's Federal Open Market Committee, and basically what the news are about is, this was already shared by Klaus Schwab, I think, today, in front of the EU committee, that we are going into recession soon. Like, this is not a secret anymore. Like, the US is going into a recession really soon. And those are kind of what the news are about. I just want to show you today too, what the last FOMC news happened. And last FOMC news happened on November 2nd. I just want to show you here. FOMC press conference and federal funds rates and statements. This was November 2nd. You see the prediction, the forecast in the previous, it was forecasted to 4%. And if we go down all the way to today, kind of like has we're gonna show the Wednesday. Where it is there. Not there. It kind of is predicted to go 0.5% up. Last time it was 0.75% raise. Now it's 0.5% raise. Just 1 second. So let's go to November 2nd. And I just want to go on the 1 hour chart quick so we can easier go back to it. News can be something really tough, and I'm going to show it to you on the example of, let me show it to you on gold, actually, because I actually caught a nice trade on that day. November 2nd, there it is. Just need to move this zoom bar quick. Okay, Friday, November 4th. See, I need to go down really deep because we had such spikes that day. So Wednesday, November 2nd. This is what last time happened. You see on the 1 hour chart, let me actually just move this to the side. This was when the news was released. If we now go to, just need to find a good spot for this zoom thing here. So I'm going to replay bar quick because you guys should see this right as it happened. So let's go to the 5-minute chart here to show you. So the news last time were presented at 7 p.m. our time, right? And this was the candle when the news got out. Let me show it to you on a 1-minute chart. Because that was maybe a little, why is it not going? Data point unavailable. On the 1-minute chart, they can't. Okay. It's bullshit.
There's also the nice exactly right theory in the group. How it went the low and then shoot up again.
Yeah, but that's the thing. So here's the 5-minute chart. Let me actually do the replay again. So the news were announced. This was the first candle. Boom. First down and then up. Then the second candle, it went first down and closed above. And you see the big spikes. Like, the market was really volatile, and it took a little bit. And then 30 minutes later, this was also news affected because that's when the press conference happened. The market shot down. So if you time it right, then yes, you can play both sides. If you time it right. But if you don't time it right, you can get burned. And I had a nice analysis that the market will react at this point, and I jumped in later after it broke down to the downside, and it actually played out really nicely. But I didn't trade it because see this market, like every candle is 5 minutes. In a matter of 1 hour, the market dropped by 27 points on gold. That's 2,700 pips. So basically the smallest lot size, that's like 300 euros or something if you risk like 10 cents per pip. So you could have like tripled your 100 euro account with it. But news you can never predict. You need to be live in the market and observing the market to react to it. This was on gold. This also has an effect on cryptos. And I'm going to show you too. Just got to go there. It's just going to take so long here on this time frame. Let's switch it up here quick. And yeah, I know my charts look confusing to you maybe. So there is the 2nd of November. This is just to show you that it affects everything, because that's why news are so difficult. That's actually all. Gotta up it a little bit so that we kind of go into the direction here. So at 7 p.m., that's when they got announced, right? So for crypto, even there, you see a big spike when news kind of before the news come, and you will see a spike when the news come. This was Bitcoin. It jumped all the way down to 2,200 and went up to 2,700. The market was just moving sideways the whole day, the day before that. And, so the thing is, like, even that has an effect on the cryptos. And it's just something that you need to be careful with, because it can burn you a lot of money, even if you play it both sides. That's why I told you, like, if you open up a trade and you want to buy here for 5%, I don't know, let's put the stop loss below the liquidity, and you want to buy for 5%, you got stopped up before. Well, if you want to sell at the same point for 5%, oh, that's the wrong one. Move this to the side because this was stop loss hit. Say we buy at the same level, sell at the same level, and the stop loss is above our last previous zone. You wouldn't even reach your 1 to 5 because you got stopped out as well. So that's why, Niels, your idea, if that makes sense, is not, not a good thing, because you can burn a lot. So now today, the FOMC news get released in, they're gonna be released in 20 minutes. Does anybody wants to look at certain different currencies? And this is the dollar index. Everybody who watched the charts yesterday saw that all the dollar pairs where the dollar's in the front, it dropped drastically. And because that was the major pair. And then let's say you looked at Australian US dollar, you were able to catch a big swing to the upside. So the dollar index kind of always shows and predicts how strong the dollar is. And if it will have, like, if that what they predict will happen, the dollar will go down way lower. And like to lows that it hasn't been there in months. Like last time the dollar was at this level was in the middle of the summer. Like the dollar really had a nice phase to the upside. And now it might jump down to below the hundreds again. If those news kick in and they announce that we're going into recession, this will be good for Europe because a lot of things might get a little bit cheaper again. But technically, you know, it's bad news for the dollar. So as you can see, let me just hide everything on here on this chart. We had a lot of spike yesterday because of the news on everything across the board. Doesn't matter what you want to trade. Everything got pumped because of the news yesterday. And those were the CPI news, which is in short, 1 second, let me actually just do the replay bar again because TradingView always has it in. On this, they don't. There it is. Core inflation rate. Yeah. I mean, the inflation rate was lower than before. That's why everything pumped, because they just told us that, you know, I don't know if you guys noticed, but the euro inflation dropped down as well. This, you know, has an effect always on the markets. So what to do when you want to trade during news? Best advice, if you're not as skilled or you're not as confident, I would say, skilled is maybe the wrong word, just don't trade. Because once the news hit, maybe you saw a nice buying opportunity somewhere. If you use the impulse scanner or whatever, it showed you a nice buy here somewhere because the trend was upwards and then the news kicked in, and the whole market got dropped. It's something here it is, sorry. Maybe it showed you something that it's a nice area to buy. We can actually check this. Let's actually do this with the impulse here because a lot of you are trading it. This is the news yesterday. And it was giving you a nice buying opportunity right here. So at this point, it told you to buy. But where do you put your stop loss? This is like the most important thing. Like all things are correct at this point to actually jump into a trade with impulse, because the moving averages are above one each other. The blue one is above the red, so it shows us that we can buy. The exponential moving average is blue. The stochastic down here shows us that the market is oversold, so it needs to be bought again to complete another cycle. And the relative strength index also shows the market is in an upwards trend. So you would probably jump into the market after this candle confirmation like this, and you probably placed your stop loss here. Your analysis was right, but you got stopped out. You could have made on that move 7% if your stop loss is at that point. So news are critical to understand that either you're in a trade already and you're upwards, then you move your stop loss to break even so you don't lose any money, or you don't trade at all. That's just the point on news always. Because if you didn't give the market enough room to breathe, even if you placed it below here, below this low, you would have gotten stopped out just by a little bit. So you see, as you move the stop loss down, your risk to reward ratio changes, right? But sometimes more pips are better than no pips. So it's something to always keep in mind when you jump in. So let's say we want to trade tonight. We're 15 minutes away from the news, and we would have to check right now volume wise what the market is doing. Let's actually take the euro US dollar here as a good example. So the market here is already picking up. It's already changing price levels. And if we just look at this upwards move, there's a lot of buying power right now already in the market. Like the volume just on this push up, there's a lot of people in the markets right now. So what could happen is, this is always a really casual thing that the banks do. So you have unfilled orders down at this end. And also in this big block and this big push over here, you have imbalances. And remember, imbalances are an imbalance between price movement and volume. So it means that the price got pushed up really, really high from where it started. So let's say it started at 1.0 and it got pushed to 1.10, but there were not a lot of people trading, so the volume is low. That's an imbalance. And what that means is that banks open orders to sit like in both directions. So a bank opens a buy and a sell to push the price into a direction. Let me actually draw this up. So let's say we see a pattern like this. You have people that are selling right now and placing their stop loss above here. And you have people that bought the market with their stop loss below here, right? So maybe down here is an imbalance. So what do the banks do is they push out the people that were buying, take their stop loss to then move the market up again. And then it goes into the right direction where the market was supposed to go. And they take out both of the liquidities. Liquidity means in simple language, your stop loss. People got stopped out of the market. And the reason for that is the banks still have open orders at this level, probably. And when they push down the market, they buy and sell at the same time, so that when there's buyers, there always need to be sellers. So they went down here. They could have went straight down here, right? They didn't go there yet because they always want the best price to sell. And at this level here, they have still buy orders open. So they buy up the market a little bit higher to push out those people, move the market then down, close the buy orders at 0, and then make money on the way down. Because banks always want to have the best price. And there's multiple examples in the market situation where this happened, even here in the market. So let me actually delete the volume here right now. Here's a perfect example for what I just draw to you. People were selling here because the market structure started changing. So they placed their stop loss above this level. But also people were buying at this level because there's also still buyers in this market. That's why you have the black candles. They probably placed their stop loss below here, below those two levels. First, the market got pushed up to take out the levels here. And you see just a little bit. Doesn't need to be big, but they take out the levels. And then they take out, they actually take a straight line here. Take out the people that had their stop loss just below here with that little push down. Before then, the market went upside. Is that clear so far for everyone, or anyone got a question? Anybody got a question? Then just say so if you do. You can always unmute yourself.
Okay. I understand some of the stuff, but I'm beginner, but a little bit difficult for me to understand.
All good. All good. I mean, you're in 2 days. I just want to show why it's important to always understand why when there is news in the market, that it's a difficult thing to really predict what's happening, because you can lose money with it. So the news is going to be there in 10 minutes, and you see the market is already picking up from, if you compare it to the rest of the day. The rest of the day, the market's been pretty calm since the midday at noon at 12. There were no real news today. It was just market volume that were pushed around here. But, you know, it was really calm this day. It didn't have really big pushes to the up or downside.
So it's dangerous to trade before news and after news as well, right?
Exactly. Because the thing is, you can't predict what's happening.
Yeah.
If you know what's happening, you would be probably rich.
Yeah.
You know what I mean? Because it's just something that that is unpredictable, because we don't know how those news are going to play out. if the prediction here, the forecast is going to be held, or if it's going to be lower or the same as before. If it's the same as before, there might not be a lot of volume in the market. We don't know. But
Yeah.
today, for example, when I took my oil trade here, you see that the crude oil inventories, that they were way, to the downside, negative to what was before. And that was the reason why the market today looked like this as well. And the news got dropped at 4:30. So I did some news trading today to show it's possible, but you got to be careful and quick, because you see here, this was when the oil news got dropped. This candle closed at this point, and this candle opened at this point and closed down here. You see there is something called a gap from here to here.
Doji, we say, or something.
No, this is a gap.
Yeah.
This is a doji candle, yes. But in between, there's a gap.
Yeah.
Any other questions?
Yeah, I have a question, Chris.
Yes.
Which strategy do you use to trade?
Combination of smart money and volume trading. And I like to
Alright.
use the impulse to look at currency strength and stuff like that.
All right. Because oh, sorry, Ali, go ahead.
No. After you. Sorry.
Chris, I saw the smart money videos in the group chat, but I'm now watching the videos of Impulse. Like, do you recommend to me to also watch this smart money videos, or just watch the Impulse videos first?
So first do the impulse, because the impulse is a nice way of jumping in and understanding trend movement.
Yes.
And really understanding like how a trend works. Smart money is a concept that just describes the banks, what the banks are doing, and the money movements they are making. So smart money is just another word for the banks, basically.
All right.
I would always start with the impulse and then go into the bounce back boot camp from there.
All right. Thank you.
Anybody else?
For the events, any news will impact for Forex, or some certain events we need to check?
So depending, you here on the news, you see the currency that they're based on. So they will affect all of the Forex pairs that are with US dollar. They will affect those news here will affect everything with British pounds. But you see the colors of the little folder here. The red is really high news that will bring a lot of volatility in the market, that the market will move really fast. Yellow is not so bad, and then there's also orange. So red news is always something to be really careful with, because they can also have an effect on everything else.
Okay, I understand. But it's good. It's they put this currency on the left side. It's easy to understand.
Exactly, because then you know where the news are from and what are they affecting.
Yeah, exactly. And this every day is this list is changing, right?
Yeah. So every day here you can see till next week already what news are coming. So next week there are a lot of Japanese big news coming and stuff like that. So before you start to actually trade and analyze a market, here on TradingView, you see it at the bottom. You see here at the bottom always the flag with the certain news coming. So the TradingView already shows it to you as well, but it's always a good thing to jump into Forex Factory to actually see if there's news. Because if you're new to trading, I would always advise stay out of the market for an hour before that, sometimes even, or make sure that all of your running trades are secured, because you can see this now have like you see this now, like the market is coming up. So this is kind of like the market is preparing something, and we can see in this market right here, we have an imbalance, so the market got manipulated, and it will be filled. But what could happen right now with the news, depending on what they say, is that the market makes
this
a
is
drop
now,
down here.
Now this is live chart, right?
Yeah, this is live chart. All the charts, the impulse tool, doesn't matter what tool, all of the charts are always live.
Okay. So after some time it will go down or up. So
Yeah.
we don't know.
So right now we broke a market structure. So we broke on the 1 minute time frame, because that's the thing you want to look at in news if you're interested in news trading. So we broke the 1 minute market structure. What could happen now quickly is that the market might recover, and once the candle closed, come up to the upward side up here, because basically this is our price level that hasn't been mitigated out of for a couple minutes. And then what the market can do is it goes up to here and then quickly down.
Yeah.
Because from volume levels, what the market probably will do is it will probably stay at this level. I don't think that it will go higher than above this red line here, and then it will just completely go down like it did today on oil.
Scary.
Well, if you know that you shouldn't trade when there is news, it's not scary, because then you can't lose money. Sometimes the best trade you could take is no trade. That's just the thing that I've learned over the years, that the best trade sometimes is really no trade. And we'll see now in a minute if it really has a big impact. I want to check gold quick. Had a big push up as well, some gaps in it. And yeah, now the news are kicking in. The candles are now you see the news. Let's go back to Euro USD to see if it's happening there as well. But on gold, you already see that the candles are, moving really fast and really volatile. But Euro USD should be a good indicator, actually. I'm just gonna switch between the different. This was already a nice entry here a couple minutes ago, like 2 minutes ago. Could have played S&P 500 here, but probably would have gotten stopped out. Yeah, probably had to switch to the 30-second move to jump in. But this market will, like, let's say we would have entered the trade at the candle close. This trade will probably, let's see if it plays out to 1 to 3. Done.
Hey, that was the news. It's 8 o'clock.
That was the news. Just told you, like, if you're quick on it and you can do it, and this is on all the boards, you could have, like, let's check our Euro USD. Yeah, trade is done. Even way higher, lower than we expected. This is 1 minute. And that's how you trade news. You stay on the chart, you look at the market structure, you wait just for the right timing, like a minute before, see what the last highest spike was, place your stop loss, and here was a 1 to 3. Could have played it for, it ran right for the imbalance over here. This is textbook. It went right for the imbalance in the volume over here.
Because this is what you will often see, right? From what I've seen, that right before the news starts, you can kind of sense what's going to happen. I mean, you're here on S&P, you're up at resistance already. You're in an uptrend, but it takes the high just a minute before.
Yep.
Then it's like, sketchy,
You got the liquidity right there. People were placing their stop loss above here. It got spiked out, and then the market went right for the imbalance down here. So if played right, and this was not even 10 seconds. Like, this candle just opened, like this is just open for 40 seconds. Like, this was in a second. Like, you can't even be that fast sometimes. But if played correctly, this would have been 7% on the S&P 500. The oil gladly wasn't affected. It's good, so I can continue trading it tomorrow. The NASDAQ didn't move at all. The Dow Jones did the same thing. Here it was even nicer. This would have been a really nice one to play. Because it didn't take out any highs. It went right for the unmitigated price level of the first push. That broke the structure. Could have ended the trade here. Stop loss above that high. That would have been my challenge today. And then you can see lots of gaps. So it went right for the last imbalance down here. The price zone that hasn't been mitigated out of. And then this was already filled. So it probably even tried to aim for this low. Take it out completely. What did the dollar index do? Yeah, it was actually good news for the dollars. So let's see. Let's refresh the page quickly here. I don't get why this is the this is the thing. I don't get why it is, because the funds rates got pushed up again by 0.5%. I don't know why this is good news for the dollar, but this news effect, in my opinion, proves me that the dollar is going into recession, because the funds rate, if they go up, like normally the markets go down instead of up. Yeah.
Yeah, this is gonna drop.
Yeah, this is gonna drop now again. It's gonna go down to this level. This is also the thing, once news kick in, the market always kind of comes back to the level where it was. But here was also a nice entry, actually. It kind of broke the market structure here on the 1 minute, and then came right into the break again. So this candle close, stop loss below the low, and yeah, 1 to 3, because that's I don't try to aim for more sometimes, because with news, just be happy that you did 3%, because it could be also a lot different. But I'm curious to see for what high it actually went. Yeah, it took out this liquidity here. So now the market probably will rebalance itself to this level that it was on the last two days. It's kind of like in this range, but it's all good. It's funny how they took out this wick high. This was also a news effect yesterday, but they took out the liquidity. Now the market will go back to where it was. You can see it here as well. It just dipped down. I'm glad I got this on camera. That's the thing. Now you can wait a little bit because of the volatility that's in the market, and then you can start trading normally again. But that's why it's so unpredictable to actually trade in those kind of markets, because now market structure is completely ruined, and we need new market structure to actually see what the market is doing. And to show you volume wise, what news do is there is no volume really. This whole candle up here is literally no volume. Let's actually put this back a candle to see. Yeah. And also the price at the bottom of this candle, there's no volume. So it will come back to fill this. The text is wrong, but it doesn't matter. What it could do is now maybe it will continue to go this way. It will probably go upwards a little bit more, fill this zone to, let's say, the 50% of this. It's always a nice indication. Now let's say it might go from here to the 50%. And then continue its downwards trend, or it goes up and continues to the upwards trend again. But damn, I didn't expect that to drop this low. I was drawing in the imbalances before and drew in like the arrow before that, this one here, and it might go down to this imbalance. But damn, today was a good day. Good analysis. But even oil now is affected too.
Also, Chris, for the smart money guys, look at how it takes those highs on the 50-minute on DXY, by the way. DXY.
Yeah.
So it's not like jump into any trade right now, but DXY just took the highs. So that's probably going to be bearish for DXY. So maybe you're going to see a little rise on the other USD pairs.
Yeah, or a drop depending on which major you're looking at. But like for the Euro USD, you might see a drop incoming then. Or no, sorry, a rise incoming for the US dollar, where the US dollar is in front, you see a drop incoming.
It's for Euro the same. Took the high from the daily open tap.
Like it's crazy. Like gotta say, like if the only cool thing here is that it took out on the 15-minute before the news, the high.
Yeah.
Like it took like this whole liquidity that was up here got taken out by a lot.
Yeah, since I watched those Zachary Morgan and Jordan's video, Zachary Hogan.
Yeah.
Then you see it's not a coincidence, you know.
Nope. That's the thing, and that's why trading is makes so much sense and so much fun. Everything here is like it's just a game of money. It's like Monopoly, where money gets pushed around from one person to another. So this was actually really, really good one. And here you guys saw it live. Like Enzo, you saw it for the first time. It's nice to show it to people. Like it didn't really come up all the way. It got resistance by this volume peak here. And then this was also a nice sell zone actually. The level of this we drew it in here, right, from this candle. The level of this peak in volume was actually a nice sell as well. To get enough that peak of volume and just aim for another 1 to 3. And it would be in profit right now. Stop loss could have been even a little bit tighter because it's news. So I think like, yeah, 10 pips should be enough. Another 1% risk. And then, you know, could hit your target a little bit later on. That's it. That's how you can trade with news. I don't advise you guys to do it, but it's something that we will see later on when you trade a little bit longer. This is something worth sharing in the story. Actually, because that's a nice one.
It's going down.
Yeah, like I said, it bounced off this volume peak here that we had before, and will now drop lower. It will go down to this area over here. It will go back to where it should be. Any other questions?
Yeah. I have so many questions actually, but I'm sorry. I know I'm the beginner.
Don't be sorry.
Some of the questions will be boring for you guys because you are already in advanced level. For the red line, you are drawing for what, and for the yellow for what?
So what we analyzed, we looked at the market, and you can rewatch this when it's on YouTube. We looked at the market when it was here.
Mm-hmm.
And we were looking at the daily, like what the volume looked like when it pushed up, because it was a big push that took out a lot of liquidity in the market. And we drew in the yellow areas are where there's imbalances, and price always gets drawn to an imbalance. So we drew this in when we were here at 55.
Mm.
And I told you it
Yeah.
probably will drop straight. I told you it could go up again to here, but I think it won't go over this red line. So it will probably straight drop. And then it kind of went up. It's a funny thing, but it was too quick to catch. And then the next minute, it did this. So our trade was completely, like we said, it will drop down to here. It even went lower. So let's say you entered at the market where we said, for example, we drew it in up here, say at this candle close here, stop loss above the high, and down to the zone here. Let's say even just the beginning of the zone. This would be 1% risk and 3% profit in 1 minute.
Okay.
If you
it
understand,
it will go down, you will lose 1%. If you go, it
No.
goes up, you will
it
make
went,
money. Yes.
because we sell, so then we make money when it goes down. When we buy, we make money when it goes up. So in this case, we win money. If we said we want to buy, then we would have lost money.
Okay.
Okay, I put my question in chat. When you trade during the news report, you anticipate on the market to fill certain open orders. Kind of, yeah. And like Xander said, look at where the market is going to before it and why. So you see, it's a funny thing. It took out the liquidity that was right above this level, right above the green line. It took out the liquidity right here, right before, and then went down to take out this liquidity that was down below here. Not by a lot, but it even took out people that placed their stop loss below here. So, like I said, that's why we always say this. It's important to look at the liquidity, because the bank wants to kick the people out before the market then continues its trend. Damn, I just should have put that trade in my MetaTrader, but it goes against my trading rules. I for myself set still a rule: I'm not trading news, not big news like FOMC and CPI sometimes, but CPI. I didn't trade today. I traded just the crude oil inventories. This is the news I traded today. But red news, I told myself the rule, like, I'm careful with it. Even though you see, if you do it like this and break it down bit by bit, look at it, it can be profitable, but it's not a gamble, but it's a risky setup. Let's put it like that. It's always a lot of risk involved with news trading. With time, you will start to smell the money. Yeah. Highs or lows broken right before the news, or if you're watching a level that gets taken after the news move. Yeah, exactly. I know people that just trade news and they go in like this then and make their stop loss even tighter. Just the minute before it, they open a sell, maybe not even a stop loss, and then market just drops. If we went on it in the last, like just when the last candle was, and we went in when it's closed, it could be 5%. That's the thing. You could have made a way bigger move there with risk to reward ratio as well. And let's look at Bitcoin quickly. See, and this is why I said it'll also affect cryptos. But here it dropped before the news already, 2 minutes before. So if you were a minute too late, you could have still entered over here and still made a really nice trade out of it, because the market already showed you, okay, it's really volatile. Let me take my stop loss up here and let's aim for 1 to 3. And just almost. Simple as that. That's why it's important to watch everything. And then we can look at gold, same thing. It already broke the market structure kind of like a little bit, went for the equal high and then dropped from 1808 or 09.5 all the way to 14 points on gold. It's a good one as well. But I didn't analyze gold with the volume and anything like that. Good thing oil is still there, because that's the thing I'm trading the most right now. Okay, anything else? Any other questions?
Yeah, Chris, I had a question. On the chart from the euro to US,
Mhm.
we saw live that it was going up, and when the news drop, the price goes down, right?
Yes.
Is that because the US is the secondary pair of the?
Yes, because it was positive news for the US dollar. So that's why it dropped, because this is the euro. This is how much 1 euro is worth in dollars.
Yeah.
The other way around. 1
What
US
would have
dollar.
happened if there wasn't the market structure and the news came out? Is it just impossible to know?
If there's no market structure, yeah.
When it's not broken like this, because you are looking for the lower.
Yeah, we saw that the way we drew it in is right. We looked at that it broke the low, and this is our entry.
Mhm.
And then
But
we
what-
set
what-
our stop losses there.
Wouldn't you place the trade when the market didn't break like this, when it still went up during the news? Coming out?
We kind of could have anticipated that it will happen because it took out those highs.
Okay.
The daily highs from the last 2 days before. So you could anticipate, okay, liquidity got taken out the market. Now it will come to the downwards liquidity.
Yeah.
But you never know. That's why I said news is really, really risky. But you understand, like Xander said, you understand by time how the money is flowing and how it's working with the news. You will have to analyze more and more FOMC news to really understand like how those work, for example, to then get the hang of it. Like I said, November 2nd.
But it was a damn good session for me to understand some things about it, because
It's good to hear,
things like
bro.
happened. Yeah, man, it's nice, man.
So November 2nd was different. November 2nd, it pushed up and then it went down. November 2nd, the interest rate got raised by 0.75%. Today it was just 0.5%. But you see the market, same thing. It took out the liquidity, the daily high before, and even went to the daily high before that. So it took out the 2 daily highs again, with pushing up during the news though, because back then they were released at 7 p.m. And then it dropped. Because like I showed you on Forex Factory last time, they were released at 7 p.m. Oh no. Here, FOMC statement, 7 p.m. So
it
an
can
hour earlier.
go in both directions. So
Yeah, news can always be in both directions. It depends on what kind of news they are, what is released, and what's the forecast. And let's go to, how can I filter? Oh. Sorry. And you can see also. So it's always, what's the forecast? Is it a good forecast? Is it a bad forecast or not? And then you will see what might happen. So today also CPI news on the British pound, it was forecasted 10.9, but it was even worse than that, so it dropped. And if you look at, let's say, British pound, US dollar, we should see today, oh, it wasn't actually that bad. It was at 8 in the morning. Actually didn't do a lot to the market. You see that on this pair, the US news had more impact. Here, this was maybe an aftermath from the news, but you see on some pairs, it doesn't really have an impact that if there's news released. This was 8 a.m. when the news got released. It continued its trend. It's just a different thing. The US dollar is the world currency. The US dollar, everything gets traded in US dollar. So whenever something affects the US dollar and affects if the US market is going into recession or not, then it has a big effect on a lot of things. Because what does the British pound, Japanese yen have to do with the US dollar? This is when the news got released. What does it have to do? It didn't do much to it. It just spiked up and down. It just pushed in volume into the market. What's the British
That's
pound?
what I meant with my question. Like, what would happen if the trend continued? And that's exactly it.
Here you see it's continuing its trend, but still it's pushing so much volume in the market that it has an effect on other currency pairs as well. Even if they have nothing to do with it. New Zealand, Japanese yen. It's just two wicks next to each other, two doji candles.
But why wouldn't this chart be a good chart of a good pair to trade on in this situation?
Well, because the news, FOMC news are once released every month, once in a month.
Yeah.
So they're big. And like I said, it has a lot of economic, world economic depth to it. What's the effectiveness of it? Because if the US is going into recession and the Federal Reserve is saying, the rates that people pay and the banks have to pay, people have to pay the banks and stuff like that, it will affect a lot of cash flow in the whole world. Because again, it's the international currency, the US dollar. So if that's the thing, why it affects everything, because everything is traded into US dollar. Same with Bitcoin. This is Bitcoin US dollar chart. You can look at Bitcoin Euro. I don't know if it looks the same. Yeah, because everything's still, Euro is connected to the dollar. So everything's connected. That's the thing. And that's why crypto is so important, actually, and why it shouldn't matter, because it's decentralized. Everything else is centralized. Everything is in the center of it all is the banks. And since banks have all kind of currencies, it affects them. Since business is done internationally, it doesn't matter what it is, what you buy with US dollar if you buy it internationally. That's why it's important to always be aware of news. Okay, any other questions or anything else? I just lost track of the chat. Good to hear that, Chief. We're gonna go big, yeah. Yeah, you can combine impulse and smart money, bro, for sure. It's not that difficult. We could have taken the same trade on your USD right here, 1 minute chart, and see the same structure break on the impulse. And the funny thing is, you saw the indication for a sell already. It was just not right there. Here, at this candle was the crossing of the two lines and the RSI going into red. Here, it was on the stochastic that it showed you that you could sell. You had a couple candles directly after it. It broke the structure. Could have executed this trade as well on the impulse. but there's more to it. Like news trading, you definitely need to know more about smart money.
Yo, Chris, I got a question.
Yeah, sure.
What is your opinion on this trade?
You want to share?
Yeah, sure.
Okay, go ahead. Share screen.
Let's go, Sander.
Let's go. So this is the short on USD CAD. I was looking at this already. I saw one module on the bootcamp from Zachary today. That was a little bit like this. News is the excuse, you know it. Not news, news. So they fill the gap here. My confirmation was the 618. This is a fib. So I go in. I waited for the 15-minute close, and then that was my entry. As we see here, market structure shifted on the 1 minute, so that could also be your trigger for shorting the retracement. But what I often notice on these moves is that you don't, you're not getting a retracement. You see, breaks down. Normally, I would just pull a fib here and then sell it up here again. I use this fib. This is what I wanted to show you last time. I'll hide the rest of the drawings 1 second. This is the magic fib I told you about. Like the sell zone. I think Zachary uses this as well. And then these are your take profits, the negative targets. This is this 272, this is the 618, and this is the one.
It just didn't come there yet, right?
Yeah, so normally you see the break here. Let me draw. So this would be the break of structure. Down. You see it, and then retracement, sell it. But on these moves, like these impulsive moves, they're not going to give you, even on the 1 minute, they're not going to give you the chance.
Yeah.
Or they will. Maybe they will still, but
not yet.
What I've seen doesn't really often happen. So I just enter on the 15-minute close, like here.
Yeah, because it hit the zone. But still, the zone is made out of a low that is not there yet. You took it out of the imbalance or the gap from the structure to the left.
Yeah, that was the gap fill. Yeah.
Yeah.
It was exactly the single print, and also the 618 from high to low.
Yeah.
And now it's VWAP is the first take profit.
Yeah, that's the thing with 1 minute time trade, like trading. Like if you don't get the break as clean as you want to see it, it can be anything, you know what I mean? Maybe then you're too late because you would have to go to the 30-second chart to see the break you want to see. That's just the thing. I'm not a fan of going below 1 minute, but I know people that do. But then you got to be so fast with executing your trade. It's not even funny anymore, you know?
Yeah, 1 minute is also the max for me.
Yeah.
Maybe
Just for news, just for news like this, the 1 minute is the only thing I look at then, because then you need it.
This could also be your sell. Maybe it's coming back up, but what do you think about this trade? Is this risky in your eyes, or is this?
No, because it's already gone, in my opinion, because you looked at it on the 15-minute, it already filled the gap. If it creates a new one, and it kind of does, but not really, it creates a new supply zone, but the candle is already mitigated out of the whole price zone. It could jump up to that volume level, but
yeah, right.
I don't know. More structure is needed for that, in my opinion. Even if you look at volume now, it needs more structure to form to give a clear, where can it ricochet off again? What level? But yeah, if you give it, let's say 20 minutes time, it might be at that price level. Would be interesting to see if it plays out.
All right.
Actually stop the recording here.